What's the housing market going to do in 2025? Insurance rates continue to spike, market statistics, all that and more on The Week in Real Estate, December 6th, 2024. Welcome back. My name is Chris Cox, and I am a North Carolina licensed realtor as well as a licensed mortgage loan originator here in North Carolina. And I also get the honor and the privilege to teach other real estate brokers their craft as a North Carolina Real Estate Commission approved instructor. And we are here for this week's Week in Real Estate for the week ending December 6th, 2024. Before we hop into the Week in Real Estate, I do just want to give this little plug here. On next Wednesday, December 11th, I will be hosting a first-time homebuyer seminar online on Zoom. You can get to the link in the description to this video. Sign up for that. I would love to see a nice full Zoom session there as we wind down 2024 and you get started thinking about your 2025 real estate needs. But let's dive right into the Week in Real Estate, starting with the headlines. So, three things we're going to talk about in the main section of this week, as well as the statistics here. A full week of real estate we had here as we passed the Thanksgiving holiday. News was light last week, but let's dive into this week and see what we have going on. So we're going to talk about first is going to be the inventory shortage. I've talked about it a couple times on previous videos that I put together, but just some more data has come out around where the inventory shortage is. I'm going to talk about the insurance shock out there that many areas of the country are facing, specifically here, also in North Carolina. And then we're going to finish with some predictions for 2025 before we get into our weekly market stats nationally and locally. So, inventory shortage. This report came out from Freddie Mac that estimates the U.S. housing market is about just over 3.5 million, 3.7 housing units short. And this has stemmed from a couple of different reasons, stemming from new construction shortfalls from 2008 all the way to really 2020, where we were not meeting the new construction needs. It also includes, over 1 million new households that want to be formed, that are kind of waiting in the wings there, in the weeds, renting a little longer than they have wanted to. But nationally, we have about 3.7%, and this is from a Freddie Mac report, or about a month and a half ago. The Federal Reserve Chairman Jerome Powell released his numbers, were sort of about the same. They were just over 4 million, again, due to some of those same root causes. But let's take a look at some of the areas that are hit the worst by this. So at the top of the chart here, you have the areas that are seeing the most significant shortfall as far as a per resident shortfall. So San Francisco heads the list. They are missing essentially one housing unit for every 30 residents in the area, and you see the rest of the top 10 there, with Boston coming in second, San Jose. Then you move towards the bottom of that list, and Raleigh, the primary market that I serve here in North Carolina, is towards the bottom of that list. Fortunately enough, we are looking at a shortfall of about one housing unit per 129 residents. So much better inventory-wise as far as the shortfall here. That is not causing values to come down because there still is a supply issue as far as houses that are on the market. People just aren't moving for various reasons over the past few years. So inventory shortage continues to be out there. We're seeing that again nationwide. Inventories are higher than they have been in previous years, but they are still nowhere near pre-pandemic numbers in many of the markets. Second thing we're going to talk about is the price of insurance and how, the effect this is having on affordability. So real estate insurance has seen a major increase over the past few years. In fact, in North Carolina alone, there's been basically a year-long battle from insurance companies with the North Carolina insurance entity that kind of sets the prices here. And I'm going to have a link to a little video that the director of insurance came out with. I'll link that YouTube video that they put together last month, just kind of explaining How rates are set in the state of North Carolina specifically, they're not really set by individual carriers. They're kind of, the standards are set by the state, but a great video on that there. But really the main factors affecting homeowners insurance and the increase that we've seen is a huge uptick in the number of natural disasters nationwide. So losses from natural disasters over the past 10 years are increased about 53% over the previous 10 years from that. That obviously is going to cause some issues with the insurance companies. Construction costs have gone up. You'll see, it's estimated about 44% increase in the cost of construction since pre-pandemic numbers. Big factor, and this is going to be state by state, is going to be state regulation. So a lot of states have some pretty harsh regulations on insurance companies and insurance carriers and expectations of those carriers, which has caused many, especially in the state of North Carolina, to pull out and no longer offer insurance coverage in the state of North Carolina due to some of the issues above mentioned. And then finally, the last point there with the insurance shock is reinsurance. So the way a lot of insurance companies protect themselves against major claims, especially catastrophic claims, is they go out to this, I guess really the third market, and get insurance on the insurance that they're insuring you on. So insurance world is a crazy world, but reinsurance costs have gone up. So the cost then gets passed on, as it always does, to the consumer, the end consumer, which are your homeowners. So insurance is having a major impact on housing affordability, especially here in the state of North Carolina. Last thing we want to talk about for today's headline session is going to be some predictions for 2025. So Realtor.com, Zillow.com, many of the major data providers out there have provided their predictions for 2025 and where they see things going. So this is a graph here from Realtor.com. They have the affordability forecast coming slightly down. So the house is going to be a little bit more affordable here, just under 30% of the gross monthly income, which is higher than it has been traditionally. However, if you take a look at some other countries out there, even our neighbors to the north with Canada, their housing affordability is easily in the 50% of income there. I saw one area, I was just looking at some data, Toronto specifically, about 92% of gross income is going towards their, or net income is going towards their housing. So yeah, we're pretty expensive in the United States. However, we've got neighbors just to the north that the affordability is much, much worse. So prediction number one, affordability is going to slightly come down, combined with, that combined with interest rates kind of stabilizing and hopefully trending down, affordability overall will improve. Next thing we're going to talk about as far as predictions, overall, they're saying about a 2.5%. Most of the major data experts out there and industry experts are saying about a 2 to 2.5% overall nationwide expected increase in values over the next 12 months or for 2025, which is good news from the perspective of people looking to make that move. That's a lot lower than the historic average. The historic average is far as increase in value is about 4% per year over the past 50 years or so. Obviously from 2019, 2020, 21, 22, we saw a huge increase of about, total in those 4 years, of about 54% on average. But they're predicting about a 2 to 2.5 is kind of the average of all of the experts out there of what we'll see in 2025. Nationwide, here are some predictions for what you may see in some metro areas. So a lot of them is, you're seeing the highest gains are going to be actually in the northern states there. So you got Connecticut and Providence leading the way as far as their expected market increases in 2025, with Hartford coming in at 4.2 and Providence, my old market, coming in just below that at 3.9%. So some other kind of just housing stock predictions that both Zillow and Realtor put out there, or trends, I guess I would say, for 2025. You're seeing a lot more pet-friendly rental properties out there. post-pandemic, the number of households that have pets has significantly increased from about 40% to just over 60% from a Zillow.com story that they put out there. And then, so that's number 3. Number 4, bad news for renters out there is that they do expect some of these free incentives that have been floating out there because of an increase in inventory for new construction rentals should start to dwindle. So you may no longer see first month rent free or $500 first month, or a lot of those incentives that a lot of metro markets saw in 2024, because the first half of 2025 is expected to see a significant decrease of almost 50% in some areas as far as new construction apartment rentals. And then finally, we are seeing a nationwide trend due to a couple of different factors, a reemergence of the word cozy in our real estate. So our real estate is getting a little bit smaller. People are settling or determining that they want to live in smaller spaces as opposed to some of the gigantic houses that we've seen in the past couple decades. So you're going to see a return to the word cozy in some of the descriptions. That is a trending word from Zillow as one of their trending words for 2025. You're going to see more dedicated spaces, that we were kind of moving away from as far as, the last couple of decades saw an increase in flex spaces. Now people are looking for a little more dedicated spaces. So those are 5 predictions for 2025. What do you think? What other trends are you going to see there? And do you agree with some of these trends that they're predicting for 2025? Where do you see the housing market? So let's switch gears here, and where we finish every week is on our statistics. So first, as we always do, we're going to start with our nationwide numbers on that. National statistics for the week ending 11/29. We saw a 2% decrease in the active number of listings from the week before. However, we are still up about 27% year over year. So the same week last year, we were at 555,000 houses, active listings. Now we're at 706. So that number has stayed about 27% for the past 3 to 4 weeks. We've seen that exact same number on that. So we're up significantly, but still, to put it in perspective, 2015, that number was about just over 1 million as far as active listings. So yes, inventory is up, however, still not to where we saw back in the mid 2010s. So that's national active listings. National new listings, we saw a huge uptick in that, mainly because in 2023, 2022, that week was your Thanksgiving week. So you would expect to see a huge increase in the numbers or decrease in the number of new listings there. So 51,000 new listings last week in 2024. That number is significantly higher than the 2 previous years. Now, the final number we look at from a national perspective is going to be the number of pending sales. So we're up about 7% at 317,000 from 2023, which was 296,000. And then in the middle is still up over 2022, where we saw a number of sales of pending sales of 299. So all these numbers kind of just lead to some of those national statistics and those predictions of housing units are expected to sell more in 2025, and assuming this trend continues up there. So that's a look at the national statistics. Now let's take a look at the local statistics here for Western Wake County. So if this is your first time watching this video, I pull the weekly information for 4 local communities here to me where I'm at. So I pull from Apex, Cary, Holly Springs, and Morrisville to get my weekly statistics here. So for the week ending 11/30/2024, the current number of listings was 547, which was down significantly from the week before at 596. However, this same week last year, we were up we're up 1.7% year over year, and still significantly lower than our 52-week high, which happened in the middle of October there as far as active inventory on the market. So we are up a little bit. However, if you go back to the national statistics, which showed year over year of about 27% here locally in the market that I'm working, we're only seeing, on average about a 2% year over year increase on inventory, which has kept prices pretty stable here for the local market. So next thing we're going to look at, as far as looking at the local market insights, we're going to look at the number of new listings. So the week ending 11/30, that was Thanksgiving week. So as predictable, there were only 24 new listings that came on the market. The week from 11/23 to 11/30. That number was down significantly from the week before, as you would expect, 66. The same week last year had 57, and we saw a 52-week high in the middle of May, which again I would expect with the full spring market in full effect in mid-May. So 140 is the 52-week high. Then the final set of statistics that we look at from a local perspective is the number of new pending sales. So these are new properties in these 4 areas that went under contract. So the week ending 11/30, we saw 62 new pending sales go under contract. The previous week, we were down from the previous week of 81. The same week in 2023, again, that must have been Thanksgiving week there. There were only 40 that went under contract. And our 52-week high was mid-April, where we saw 117 new pending sales in there. So that's your market insights here for the local 4 communities closest to me, where I am at, just outside of Raleigh, North Carolina. Where we finish every week is just an insight into our mortgage minute. So good news for people looking to get a mortgage out there. We have seen a steady decrease over the last couple of weeks here on the 30-year mortgage rate. Now, again, this is a composite number, an index number, so to speak, that Mortgage News Daily pulls together. That gives an insight into, you can get rates higher than these and you can get rates lower than these. This is kind of the composite for 30-year fixed mortgages that Mortgage News Daily reports on a daily basis. So that index has come down about 0.08 from the week before, indicating about, I want to say, the 3rd week in a row where we kind of saw a spike at about a 7.1, 7.12 a few weeks ago. We've trended down. Good news. So good news for future mortgage holders there. A week ago, 6.92. 1 year ago, this same week, 7.08. So about a 1/4 point lower. We had a 52-week low of 6.11 and a 52-week high of 7.52. And then the final bit of data that we share on the week in real estate is, what is the 10-year Treasury yield looking like? So we share this number because this is a good indicator of where the mortgage market may be going. The 10-year Treasury yield usually is a leading indicator for where the mortgage market is going, and this is continuing its trend down as well. We saw this spike at about 4.4 a few weeks ago. Now we're down to 4.18 as of yesterday, 4.24 a week before. 1 year ago, we're almost dead even from that. And we saw a 52-week low of 3.64 and a 52-week high of 4.71. So that is your week in real estate. Thank you so much for watching these videos. Hopefully you're getting some great insights onto what is going on in the market, where we may be heading based on these future data indicators. So thank you so much for watching. Hope to see you again next week. Bye-bye.